Digging in a little bit more to the markets, Joshua Mahony's Chief Market Analyst at Scope Markets. And it's always good to see you, Joshua. Now, look, because we've been talking about Japan saw its biggest one-day drop since 1987, wiping out all of the gains they've had all year. So what is going on? Is this another Black Monday?
Yeah, exactly. 12.5% off in the Nikkei 225. I mean, it's going to feel like a Black Monday, but certainly this was to some extent expected. Certainly not to this degree, but it comes off the back of a period of harsh declines for Japanese stocks as we saw the resurgence of the Japanese yen, the unwinding of those yen shorts, really dealing significant damage when it comes to the Japanese indices. And it's, as you've said, reversed a market that has been, by and large, the outperformer when it comes to equity markets over the course of 2024 thus far. It was up something like 26%. Well, now it's pretty much not up over the course of the year. But certainly it's been a pretty volatile time, most notably over in Japan. And there's no guarantees that this is going to be the end of it.
And we've seen a sea of red across bourses around the world. I mean, why are tech stocks in particular and crypto, the Bitcoin, having that major battering?
Well, first and foremost, tech stocks have been hit hard for weeks now because as we came into the US earnings season, people became very fearful that the sky-high valuations that are attached to these companies may not be justified. Now, many of these companies have done relatively well when it comes to their earnings, but now we find ourselves in a position where there's fear about the unwinding of the carry trade associated with Japan. People are essentially selling positions, even if they think they're good positions. They're just having to get out of them, to liquidate them, to fund other positions that they owe money for. Now, certainly when it comes to things like gold and things like Bitcoin, arguably they should do well at times like this, where there's a ramp up in expectations around easing from the Federal Reserve. There's a devaluation of the US dollar. But as we've seen many times in the past, and people that follow the markets will know this, at times like this, where you see widespread selling, people even sell the things that arguably will do well once all of this settles down. So I think things like Bitcoin and gold might do well in the medium term, but just for the short term where we're seeing these jitters, you're likely to see selling pretty much everywhere. So
a bit of a tech bubble maybe, and then some people profit-taking while they can with crypto. Look, let's talk about the US economy, because JP Morgan, they're saying there's a 50% probability of a US recession, which will inevitably drag down markets around the globe. But that also means there's a 50% probability that there won't be a recession, doesn't it?
Yeah, we've seen Goldman Sachs upgrading their sort of likelihood of a recession to 25% from 10%. So, you know, people are upgrading the chance of it. But bear in mind that US GDP is currently running, according to the Q2, at 2.8% annualized. So we're not talking about an economy that's on the brink of negative growth. Certainly everyone's a little bit shocked and not feeling great about the fact that we've seen this uptick in terms of unemployment. And that in particular has really sparked these calls for a recession. But we're some way away from it, and there's a good chance that this fear of a recession could suddenly cause 50 basis points worth of cut here and there. And all of a sudden we're seeing the economy boom and everyone's worrying about inflation again.
Joshua Mahony at Scope Markets, thanks ever so much.